Illinois has enacted new taxes on digital activities under SB 3019, effective from 1 January 2027. The measures include a 10% tax on gross receipts from targeted advertising services provided in Illinois, applicable to providers earning more than $1 million in Illinois targeted advertising revenue over the prior 12 months. The law also introduces a social media platform fee and a privilege tax on digital asset sales. Welcome to another episode of Reg Talks, as we explore how these new levies will affect tech companies, advertisers, and digital asset service providers operating in or into Illinois.
I'm excited for this conversation. I'm here as someone who's followed digital regulation for years, and the changes under SB 3019 will absolutely shake up the online ecosystem. Listeners, by the end of this episode, you'll understand what these taxes mean, who pays them, and how everyday people and businesses might feel the effects.
We'll break down the targeted advertising tax, unpack the new social media platform fees, look at the privilege tax on digital assets, and touch on relief measures for Illinois residents. Plus, we'll talk about compliance and oversight, who's keeping tabs on all this.
Get ready for a clear rundown and practical insights. Let's jump in with the digital advertising tax.
Let's start with the digital advertising services tax. Illinois is going to impose a 10% tax on gross receipts from targeted ads, but only for providers pulling in more than $1 million from Illinois-based ads over the past year. That's pretty significant.
That threshold means smaller businesses are off the hook, but major platforms think national ad networks and big tech companies will feel it. What's striking is how targeted advertising is defined. Any ad that uses personal info and is served digitally. So, banner ads, search engine ads, even those annoying pop-ups.
And Illinois isn't playing around with user location either. They'll use everything from IP addresses to geolocation and billing info to decide if a user is in-state. Providers must register and make their tax payments monthly.
Monthly remittance keeps the system moving fast, and it means compliance will be ongoing, not just an annual event. That's a big shift for digital ad businesses.
That actually reminds me, social media platforms are getting hit with a fee too. It's based on the number of Illinois users whose data they collect, with a tiered structure that ramps up quickly.
For platforms with over 100,000 Illinois users, it starts at 10 cents per user per month. But if you cross 500,000, the base fee jumps and you pay extra for each additional user. Over 1 million users? The base fee shoots to $165,000 plus 50 cents for every user beyond that.
Platforms have to report their average monthly user count to the Secretary of State within 2 weeks so the state can track who owes what. If platforms don't pay, the penalty matches the unpaid amount, doubling the pain.
That punitive fee is serious. It's designed so platforms can't just ignore the new rules and hope to get away with it.
Funny you say that, because the privilege tax on digital asset activity is another layer. Illinois will tax digital asset brokers at 0.2% of the value of each transaction, but only if they have a physical presence or hit $100,000 in gross receipts in Illinois.
So, crypto exchanges and NFT marketplaces with enough Illinois activity will be affected. The law defines digital assets as anything used for exchange, accounting, or storing value, except regular fiat currency like dollars.
It's a pretty broad definition, but it's clear the state wants to capture revenue from the growing digital asset sector.
That approach reflects how states are adapting to the digital economy, trying to make sure new forms of value don't slip through the cracks.
After all those new taxes, Illinois is offering some relief to residents. The bill includes a sales tax holiday 10 days in August 2026, where sales tax on clothes and school supplies drops to just 1.25%.
That should help families with back-to-school expenses. Plus, the gas tax increase, originally scheduled for July 2026, gets delayed to January 2027. So drivers get a 6-month reprieve before seeing higher fuel costs.
These measures are clearly designed to offset some of the new revenue burdens on everyday people, while the state taps into digital business growth.
Balancing tax increases with relief is tricky, but it makes the overall package less harsh for residents.
Now, all these new taxes mean new oversight responsibilities. The Department of Revenue handles digital ad taxes, requiring providers to register and pay monthly. Meanwhile, the Secretary of State tracks social media user fees with monthly reports due from platforms.
That division of duties helps streamline enforcement. Social media platforms file their user counts within 14 days of each month, and digital ad providers must pay by the 20th. It's a lot of paperwork, but the state's making it clear who's responsible for each piece.
This structure should help prevent confusion and minimize compliance gaps, though there'll surely be some bumps as businesses adjust.
I've seen similar rollouts elsewhere, and it always takes time. But Illinois is staking its claim as a leader in digital tax policy.
Let's wrap up with 3 main takeaways. First, Illinois is launching major digital taxes on targeted ads, social media platforms, and digital asset activity. Second, relief measures are built in for residents, from a sales tax holiday to a delayed gas tax hike. Third, compliance is split between agencies, with monthly tracking and payment deadlines to keep everyone in line.
If you're a business operating in Illinois, start mapping your digital revenue streams and user data now. The best action step is to get familiar with the new registration and reporting requirements, so you're ready when the law takes effect in January 2027.
That preparation will pay off, and it's always easier to adjust early than scramble later. Thanks for joining us as we unpacked Illinois' digital tax revolution.
Stay tuned for future episodes. We'll keep breaking down complex policy shifts and what they mean for you. See you next time.